Hello guys, welcome to my channel. What is the federal estate tax? The estate tax is levied by the government on estates when you die and pass on your assets to heirs. If your estate has a high enough value after you pass away, then you'll have to pay estate taxes on anything you're looking to bequeath. This could include cash, real estate, retirement accounts, or a range of other assets. For 2022, the threshold for federal estate tax is $12.6 million for individuals and $24.12 million for married couples. For 2023, this limit jumps to $12.92 million for individuals and $25.84 million for married couples. Federal estate tax rates. To make things simple, if your estate is worth $12.6 million or less, you don't need to worry about the federal estate tax. However, any estates worth more than that are taxed only on the amount that surpasses the $12.6 million threshold. For most of the federal estate tax tiers, you'll pay a base tax as well as a marginal rate. Current federal estate taxes max out at 40% for taxable amounts greater than $1 million. For example, let's say your estate is valued at $12.5 million in 2022. That means your total taxable estate is $440,000, as it's worth that much more than the $12.6 million threshold. At the appropriate tax tier, you'll pay the base rate of $70,800 plus an additional $64,600. That comes out to a total estate tax of $135,400. The Estate Tax Exemption. Since 2013, the IRS Estate Tax Exemption indexes for inflation. It took a big jump because of the tax plan that President Trump signed in December 2017. For tax year 2017, the estate tax exemption was $5.49 million for an individual, or twice that for a couple. However, the new tax plan increased that exemption to $11.18 million for tax year 2018, rising to $11.4 million for 2019, $11.58 million for 2020, $11.7 million for 2021, $12.6 million for 2022, and $12.92 million for 2023. If your estate is in the ballpark of the estate tax limits and you want to leave the maximum amount to your heirs, you'll want to do some estate tax planning. If you're in charge of paying estate taxes for a deceased loved one, you might want to enlist a tax accountant and an estate lawyer to help you shoulder that burden. In addition to estate taxes, you may need to file separate income taxes for the deceased if their estate is generating income above IRS limits. To file a U.S. estate tax return, you'll need a tax ID number for the estate. An estate's tax ID number is called an Employer Identification Number, or EIN. You can apply for a number online, by mail, or by fax. If you want to limit your exposure to the estate tax, you might want to start giving some money away. You can make a charitable donation or give to the heirs whose inheritance would otherwise take a hit from estate taxes. For 2022, each single filer or member of a married couple can give up to $16,000, and not just to one person each. That limit applies to as many people as you want. If you give more than $16,000 to any one beneficiary, you will have to pay the federal gift tax rate, which is the same as the estate tax rate, 40%. For 2023, each single filer or member of a married couple can give up to $17,000.